Hello and welcome to Beyond the Pivot, the podcast where we bring you honest, unfiltered journeys from Africa's entrepreneurs and innovators.
I'm Kabwela Malupande, joined by my co-host Martin Vitek. Each episode, we dive deep into the realities of building and growing businesses on our continent. Let's get started. This is Beyond the Pivot.
Our guest today is Nyeji Mhango, one of Zambia's leading investment executives and entrepreneurs in gender-smart and sustainable finance. She has over 20 years of experience in sovereign debt, banking, and corporate finance, and is known for creating smart capital solutions for businesses and governments across the region. As the CEO and founding partner of wCAP, she has grown the company into one of the first female-owned and managed funds in Zambia, helping drive private credit and impact investing. She also serves as a trusted board advisor with a strong focus on good governance and strategy. Welcome to Beyond the Pivot, Nyeji.
Thank you very much, Martin. It's really nice to be here.
We are glad to have you, and a lot of people might be interested. How did you get to the world of banking and finance? Since it's the first female-owned and managed, wCAP is the first female-owned and managed fund in Zambia, it's probably not the common path. So what sparked the curiosity, what made it your calling?
So I think my interest started in investing during my university years. I was always curious about how capital would be used to drive both financial and also real world outcomes. And my very first role after university was in a boutique investment banking outfit. And they also had a small a venture capital fund where I had the opportunity to work on early stage transactions as well as IPOs. That's the time when Zambia was privatizing a lot of its state-owned enterprises, and there were a number of IPOs taking place in the market at that time. That early exposure really gave me a strong foundation and appetite for investing. And so later in my career, I was fortunate enough to be involved in a private equity transaction. And at that point, it became really clear to me that this was not something that I was just good at. It's actually something I enjoyed doing. Somewhere along the way, I ended up going into foreign service and as one of the first secretary economics or economic advisors for the missions in the UK and in Malaysia. And it was during the UK posting that I had a chance to meet several women who had successfully launched investment funds. And I was just completely amazed by the fact that they had done this. And that experience was pivotal because it showed me that it was possible to do something unconventional, like you said, for the Zambian market. And it gave me the conviction to build something of my own. So later on in my career, after banking, going into consulting, I saw an opportunity and I started sharing this vision of having a fund with my friends at the time, still my friends, especially after recognizing a clear funding gap in the market, particularly for women-owned businesses. And that's what inspired the birth of wCAP. It's a fund built to close the gap and build and back high potential businesses in underserved markets while we apply a gender lens into our investment process. So we pivoted from being an advisory firm when we started in 2020 into now what is an investment management firm. So it was co-founded by myself, by Yvonne Impala and Melissa Gray. And as I said, the purpose was very clear. We wanted to close the funding gap for high potential businesses that were often overlooked, and particularly those that were led by women operating in Zambia and selected markets in Southern Africa. We focus on private credit because we feel that that's what's appropriate for the market that we're in right now, as well as the stage of the development of the companies that we deal with. And we provide flexible debt capital to high growth businesses that require funding to scale, but they don't quite fit the traditional bank mold. And our approach is rooted in deep local knowledge, disciplined underwriting, and a commitment to inclusive and sustainable growth.
And that's it, because you just answered all my 20 questions that I had for
I didn't mean to do that.
No. It's not the first. It's not your first rodeo, I can tell. So in the alternative universe, when you were deciding to go into private equity and so on, Are there any other careers that you were interested in that other universe would you be doing instead of this?
I think I would be an artist, but I'm not very good at it. I'll be very honest at it. It is an interest I have. I do collect art. So maybe in another life, I would have been an artist.
Owner of the art gallery, or maybe misunderstood artist? Huh?
Yes, probably both. Probably both.
Well, it still can happen, right? Like you said, you are collecting art, so both you are on both parts. So that's the beauty of it.
Yes. Yeah,
And
absolutely.
I mean, you mentioned a lot of information about wCAP and how you got to the journey, how you started, who you're serving, and so on. So maybe what I'm interested is you pivoted. You said you pivoted 4 times. Why the pivots, and what was the essentially the evolution of the wCAP in the years that in its existence?
So as a business, I think we can say we've only pivoted once.
Okay.
We started out in the advisory space because we realized that there were a number of businesses that lacked the foundational requirements in order to thrive, receive financing, unlock financing. We were women in business that struggled to raise financing from the banks. And so we thought it would be appropriate to set up a vehicle that would address this. But before doing that, we had to find the entities to be able to invest in. And we couldn't find it, especially when you apply the gender lens and look for women-owned, women-led businesses. So we created what is called the Women in Business Investor Readiness Advisory Program. That's what we used to launch the business. And through that, it turned into what is called a value creation tool, pre and post investing, that we use to either align the business, prime it so that it's able to receive financing in a sustainable way, or to, after our investments, be able to scale in a way that is sustainable and meets the requirements that we have for them.
It's very hard for people to imagine. Yeah, go ahead.
Sorry, you asked me about the pivot. So
Yeah.
the pivot was moving from the advisory space and now using that as a tool in our investment, into our investment process, because now we've moved into the fund management space. And that's essentially what the core business is today.
So essentially it started with advisory to make money for the operations, I suppose, and also find the right businesses to invest in. And then you were able to raise funds for the fund. It's a great journey for, to build your credibility on the market, I believe, and then actually show people, hey, we can do it. Invest money in us. I heard in one of your interviews that you do a lot of pitching to bring investors to your fund. So
Yes.
what are the most functional points you heard or you used so far in those pitches that that allow people invest the money in, like break down the barriers, show them that there is limited risk, but we know how to handle the risk of Zambia or the other countries in that region?
Yes, I think the most important thing, the most important aspect that LPs look for is your ability to invest and to your ability to return funds. Does your structure have a solid team in place? And do you have the fundamental issues addressed from a governance perspective? And these are the things that we had to deal with in the very beginning. It was very difficult to unlock financing because this is not that kind of market that has a lot of Zambian high net worth individuals, like in the US model, in the Western model, I should say, where they say access funding from friends, family, and so-called fools, so to speak, because they're taking that initial risk in you. As a new fund manager, you need to be able to think of unconventional ways in these markets to raise financing. So we unlocked our financing from a grant, from a fund of funds that allowed us to do 1 or 2 deals, which essentially turned into what is a micro fund of sorts, you could say. The vehicle that we created now I think is worth $2.3 million with 5 deals under our belt. We needed to demonstrate. So as somebody that wants to set something up like what we've done, you need to be able to demonstrate your capability to structure instruments, structure an investment vehicle, choose appropriate markets, and then have those investments start to deliver a return, the exact return that you intend to deliver in the fund structure or vehicle that you create. So this has taken us 5 years to get to this point. And our goal now is we've launched a $10 million private credit fund. And this private credit fund focuses on high growth businesses in Zambia and in the Southern Africa region. with a high impact. We serve markets that are underserved and that deliver significant returns, but then also have some kind of measurable impact within the ecosystems that they operate in.
What is your most important impact metric? Yeah.
So we're mostly focused on the Sustainable Development Goals. We're an agnostic fund. However, we do have a keen interest, or we do like to focus on those on deal flow that provides just provides a decent financial return, but then also addresses some kind of impact within their ecosystem. We are sector agnostic, and so that means we like climate smart agriculture or sustainable agriculture, smart manufacturing, technology. Climate tech, of course, is a very big thing that is thematic in the impact investing world right now, and especially relevant to where we are right now in Southern Africa with the power deficits that we're facing. So of course, we're very keen on renewables. We are targeting, our ticket sizes range from $250,000 to 1.2 million, which means if you're in the renewable space, we look at the microgrid type entrepreneur. But what we find a challenge with is the level of experience that the entrepreneur has with respect to delivering something like this. And so we're still in the process of refining and structuring a product that will cater to somebody of this nature. Essentially, that is what we do. We provide structured credit in a bespoke way to entrepreneurs in this particular segment. And we also prefer it when, so we do invest in businesses that are a little bit mature, I would say, high growth. So they've got revenue maybe beyond 3 years, and they have a valuation of at least $1 million US. So fairly mature, I would say, for our market as far as startups are concerned. And we also structure debt instruments. We provide senior term loans or senior debt. We provide mezzanine finance, and we also do revenue-based financing. Still in the process of refining these products, but this is what we are focusing right now within the fund. And as far as our existing investments are concerned, with that micro fund or micro vehicle, you could say we've got assets right now that are delivering between 10 to 12% per annum. So these are the investments that we intend to have similar investments within our portfolio for the fund.
And since you mentioned in the previous response that the biggest issue to finding these deals, these companies, is their investment readiness. Now I'm mentioning these companies have to be, let's say, advanced. It cannot be just a startup with an idea, or like I have a plot of land, I want to build a solar power plant or stuff like that. What are the biggest red flags that you have to work on to actually reconcile their investment readiness with the types of deals you are looking for?
Yes. So in terms of the red flags that we see whenever we are assessing deals, I think it's scary if the entrepreneur doesn't have a solid grasp on the financial aspect of their business. They need to have a thorough understanding of the market that they're operating, and their business model needs to make sense. It needs to be one that demonstrates capability to scale. We also look at the composition of the team that comes to us. How experienced are they? If they're intending to, we don't shy away from businesses that want to use the financing to add an additional revenue line to the business. We did this with one of our investments. I'm not sure if I'm able to say, but yes, I think we funded the avocado line for the Luano Food Company, and this was it's the first of its kind as far as the business is concerned in terms of processing avocado oil and exporting it outside. We don't shy away from transactions like that. So if you're able to have a solid grasp on the business and demonstrate that you're capable of returning the money based on something new and innovative that you are doing, then I think that's one of the things we like to see. If you say you want to use the money and are not able to show a solid picture, a solid case for investing to us, we probably will not proceed with you. Other challenges we find, of course, are governance structures. As you know, most businesses in the region we operate in stem from or come from family. They are family-owned businesses, and so you do have some governance issues that we tend to find. But even if we find some of these challenges, and even if we see these risks or red flags, we don't do what the banks do, which is just to close the door in your face. We will give you, if we really like the business, we will give you a structured approach to correcting the fundamental flaws that we found in your business. And then, and this is the pre-investment and post-investment tool I was telling you about, where we do value creation on both sides. And if we are pleased with your performance before investing, you're willing to, that's another thing. The founder must be willing to seek guidance or take on constructive criticism that will add value to them as a founder and to the business. We found, in my experience, I think those founders that are reluctant to do the work that's needed to solidify the foundational aspects of the business. They don't want to deal with the academic side of things, so to speak. They don't do very well when you go back to them maybe 24 months down the line. You will find that they're still stuck with the same problems that they had because they just were not willing to do the work. They were not willing to take on the advice they were given. So having a founder that and a team that's able to absorb the proposed changes is a very good thing. Founder is inflexible in that way. I think that is definitely a red flag. So in the process of us identifying these red flags, we address the financial, the operational, and the organizational issues that we flag in the assessment process. And then we provide a structured approach or solution to the company before we invest in them. And if the founders agree, we proceed with the investment and attach performance indicators that they need to achieve for the duration of the facility. So that's the difference between what we do as a private credit fund or private credit institution compared to what the banks do. I think the banks will just sort of give you the money, maybe call you in a few times to find out how the business is doing, but we like to take a bit of a hand-holding approach, a bit more hands-on with respect to how we do the investing. I guess you could see that's a VC or PE approach, but we lend.
If you're enjoying this episode, take a second to like, share, and subscribe. It helps us reach more people and keep these conversations going. Thanks for your support.
Yeah.
It's interesting to hear because I feel like that's a big value add that the startup owner, the government, startup owner or board gets, that have somebody experience on their side that has been through other projects, have been with other businesses. I can kind of not just fix the biggest issues, but also find opportunities on the market afterwards, because, you have been exposed to so much compared to them that you can address it and say, hey, maybe there is a new avocado line that you could do to repay us in time or get investment in as well. What do the founders think when you tell them all these things? Are they more annoyed or more happy, or they're like, oh, I have to work more now, or I cannot focus on my business? What is their response to finding your checklist of things they have to fix?
Yeah. Like I said, you find different kinds of founders. Some want to do the work and others don't. But I can confidently say that those founders, the founders that have listened to what we've told them, have done very well. I can give you an example of a deal that we did. Zanga African Metrics invested $250,000 into this business. She was a founder that came to us as a consultant with an idea and a product that she wanted to create off the back of the professional background that she has. And she created an HR analytics, data analytics business that contextualizes cultural aspect of psychometric testing, I guess you could say, within emerging market spaces. It's not a conventional business that you would find, but it was an idea that we believed in, and we gave her the strategic plan, gave her the foundational aspects of the strategic plan to be able to implement what she wanted as a vision. 3 years down the line, she was able to unlock financing. This was during the investor readiness course. So she unlocked financing, and she was able to create this entity, build a team, create and establish a revenue generating business, which we eventually invested in after 3 years. So she listened to us. And she was that founder that implemented what she was told. I mean, she's worked with several other people after us, and her success really is because she applies everything that she's absorbed into from all the places that she has drawn guidance from. And there you have it. The business is doing very well, the first of its kind in Zambia and even in the
Mhm.
region.
We had Nankonde on the show before, and I have to say
Yes,
she's so energetic, so energetic.
absolutely.
It's I forgot the word, but it's gonna sprinkle on you with energy. It's my point. Like it's gonna
Yes,
capture even through the TV or YouTube, whatever you're watching on. So she's amazing.
yes, she really is. She really is.
So how does your day-to-day job looks like? There is people that might want to be fund managers. I'm sure there's some things that are more fun for you, things that are also a little bit more annoying. So what are the let's say necessary evils and exciting stuff you have to deal with weekly, every week, day to day? How does it look like for you?
So I think I actually enjoy the LP meetings. I do enjoy speaking to investors. And I feel like whenever they take us through a due diligence process, it's a challenge to us because sometimes you get it right, sometimes you don't. But when you don't, as we were saying about guidance, it highlights where you need to improve on something within
Mhm.
your business. So I think I'm a builder as an individual. And what I enjoy about this job is we're in creation mode and we're building something that's supposed to last. It's supposed to be an investment platform that um, goes beyond us because it's not just about us. It serves the ecosystem that we are in. Funding is very difficult to get. Private capital is hard to get as a founder, and we want to be able to tap into this missing middle. So no day is the same, but I would say a typical day for a new fund manager is going out to speak to LPs to try and raise financing, looking at your investment process and seeing, learning lessons learned from your previous transactions. What is it that we can do better? How is it that we can stand out from the rest of the other fund managers that are speaking to the LPs that we're speaking to? From a business creation perspective, I would say it was really nice, as the partners or the founders putting a team together that would actually work seamlessly to be able to deliver the results that we wanted to see. So there are many things, but as somebody that's going into the market and looking to establish a fund, those are the fundamental things. Every day you do a deal or you try to do a deal, you put your team together, monitor your investment processes, systems, make sure that they work. You need them. Technology is really important. If you have the financing to be able to do it, then you should digitize all your processes. You need to make sure that all your policies are in place. Everything that you put down on paper, you need to be able to deliver in real time or from a real perspective. It's not easy. What's nice is I think the best part of the job for me personally is being able to see the results from the investment that we make. We were just speaking about Nankonde. There are other investments that we've made, and being a part of that growth journey is very fulfilling for me as an individual. I'm sure the partners feel the same about that too.
Would you say that one of the more necessary skills of a fund manager is patience? Because I feel like
Yeah.
it takes a while before you see the results from your investment. You
Yes.
said you worked with Nankonde for 3 years before you invested in her. So,
Yes.
uh, apart from patience, what other skills or characteristics do you think the fund manager should have that are not noticeable on the first look?
Um, I think it depends on what aspect of the business you are working in. But
Mhm.
overall, I think you should be adaptable. You need to be resilient, especially if you're the one that's building the business. Resilience is key. As I said, it's taken us 5 years to get to where we are right now. Me personally, I started this whole process 8 years ago. So you need to be patient, persistent, and you need to understand each and every single aspect of the business that you are dealing in. Numbers is important. You need to have very good financial analysis and investment appraisal skills. You need to have some kind of insight into the performance of the economy, of the assets that you are investing in. And right now, you need to be familiar with ESG. It's become something that's very prevalent in all the LP conversations. You need to also understand the way the LPs the LP psyche would say. You need to understand which type of LP you are speaking to, and also understand the LP psyche of who you are speaking with. Where are they right now? What is it what is it that they want to see? We tend to focus predominantly on family offices, and there's been a trend. It looks like they're moving away from conventional equity investments into private credit. And so we feel like we've made the right move. We've positioned ourselves correctly for this. But there are two types. There are those that are very commercially driven, and then there's that are very impact driven. We are in the middle. So in the process of having these conversations, you cater for both. But I think those are the core skills, or core soft and hard skills, that you would need as somebody that wants to go into this space of managing institutional money.
It kind of sounds like it could be two people, like that's why you need a team.
Networks.
Yeah, exactly. So I feel like, I'm more the people person, but I struggle with Excel spreadsheet, so I would need second person there next to me that was good with the Excel spreadsheet and can put everything there nicely.
I was joking the other day with a friend of mine. We attended the launch of a company recently, and they said, "Oh, I'm really good at this networking thing. How did you begin?" I said, "Well, I'll be very honest with you. My very first job, it was actually the one when I went into foreign service. I actually read a book on how to network. It's not something that comes naturally to me, so I had to learn how to do it. And that's what you do when you are building a business. You just pick up the skills that you can and run with them."
Absolutely. I watch so many YouTube videos and I still struggle to persuade myself to go approach somebody else, It's not easy.
Yeah, I'm
but,
that introvert.
Yeah, yeah,
But
true.
yes, needed to do something outside the box.
Yep. So, to understand the volume, like how many deals are you looking at any month, and how many do you pick afterwards?
That's a very good question. Info is actually a bit of a challenge to acquire, especially when you're dealing with multiple jurisdictions. So we rely heavily on our networks, personal networks, venture partners, accelerators, incubators, mostly accelerators, I would say. And also we belong to investor networks that pass deals on. So finding deals has not been easy. And that's basically what we've been doing in order to get our deal done.
Gotcha. So it's more cooperation across several actors in that system. I assume it's very hard to do it alone. So
Yes.
you are also inviting
Yes.
other partners to join you.
Yes, and we do it as a team. Really, we set the criteria that we're looking for, and in everything we do, it might be our analyst who brings a deal on. It might be one of the partners that brings a deal on. It doesn't matter. We just are always out looking for something fresh, something new that we can invest in, and also be a part of the growth journey of. So yeah, finding the right deals has been very difficult, as I've said, especially with the metrics that we have created, or not created, but the criteria that we have chosen. We've chosen this particular segment of the business because I think they are entrepreneurs that have demonstrated that they are serious, that they are in the business for the long haul, and that they have gone beyond the early growth, early stage trial and error phase. It's definitely an easier thing to invest in. It's an easier entity to invest in because processes, systems, people, price, market, everything has been established, and they just need financing to grow their business, whether from a working capital or capital expenditure approach. However they use the financing, that's what we've chosen to do. But in these markets that we operate in, you will find that the startups just stay in that perpetual fundamental startup phase and don't go beyond a certain point. And this is why we do the gap analysis, is to find out what the fundamental issues are financially, operationally, organizationally. What can we do to turn this business around, to take them into that growth stage phase of business development?
What is the appetite among Zambian businesses to grow beyond borders. I'm going to tell you why
Mm,
I'm asking, because we are also landlocked country in Czech Republic, and
yes.
historically we have one of the lowest amount of people trying to expand beyond the country because they're just happy with what they got. They grew
Yes.
an SME and they are pretty happy with it. And they don't want
Mm,
to the hustle to go to Germany or Austria or the other countries that are bordering us. And when I
yes.
talked to Kapvela, he told me that a lot of things, and those things were very similar to the appetite and mindset of what we have over here. So I'm curious, like, how hard it is to persuade Zambian companies that you work with that maybe they should expand to Botswana, or Namibia or any other countries that are neighboring Zambia.
To be very honest with you, it hasn't been a difficult thing to do. That's actually
Hmm.
one of the approaches that we take because we do dollar denominated investments, prefer businesses or business models that have a certain portion, I'd say maybe 50% of their revenue in foreign currency. And the easiest way to
Hmm.
do this is to have an export led approach. And so in our conversations with the companies that we deal with, we do as part of the I guess you could say value creation approach, do speak to them from this way because it's about market making for them. When you look at our market right now, population is only roughly circa 20 million people.
Hmm.
If you look at it from a consumer perspective, that's not a very big, because you're only looking at a portion of that. It's not a very big market. So you need to look externally, and looking regionally is the best way to do it. We now have the AFCFTA that has been implemented, which allows businesses to export their products into the rest of the African market. Wherever possible, we encourage them to do this. But if there's an opportunity to export abroad, it's definitely something that we are also, we definitely encourage. And so this is the approach that we take. And we've been lucky because so far, almost all the founders that we've spoken to have adopted this approach and are looking at things from a regional perspective because scalability is a fundamental thing we look for at the end of the day and is good for their business.
And also, it kind of shows they're not satisfied with what they have and they want to grow. So that's also amazing that you have that there. I also noticed in your introduction one thing I wasn't sure of what it actually means. That's gender smart. So could you more expand on being gender smart and what it means in your fund?
So we are a female founded investment management firm. And so in everything we do, we apply a gender smart approach. So that is a gender smart approach. Um, there's something called, we're members of an organization called, an initiative called 2X Global. It's basically an initiative that comes together to promote investments and put investments into the hands of fund managers who will invest in women-owned or women-led businesses around the world. The initiative, I think right now from 2018 has raised something like $33 billion. I stand to be corrected, something like that. And we as wCAP are members of that. So this means that because we are a 2X member, we apply a 2X approach into our investment process, which means a company needs to have at least 51% shareholding status, or it has a product that is aligned to women. We also like to see it could be that the value chain has a certain number of suppliers that are women-owned, women-led. And so when we say gender smart, we just want to see literally from an economic empowerment perspective, male economic empowerment perspective, it really is about putting power into the hands of women. We want to see women at shareholder level, if not then at board level, if not then in senior management, or we want to see a large composition of staff. Ultimately, it's about job creation and incomes. That's what we intend to do. And so when we say gender smart, from a wCAP perspective, that's what we really intend to do.
If you are enjoying this episode, take a second to like, share, and subscribe. It helps us to reach more people and keep these conversations going. Thank you for your support. So, focusing on this, like you said already, underserved market of women-led businesses that
Yes.
produce things for women, like products or services as well.
Yes.
And I also noticed that the stat that if there is a woman involved in the leadership, the business is less likely to fail. Have you noticed it as well?
That is
In
very
your
true. I can give you a fact. I saw something, Boston Legal, I think it was BCG, sorry. They published, they did a study that said for every dollar invested in women, you get two. So gender diverse teams actually deliver more than standard companies, I guess you could say, that are skewed one way or the other. Generally, women are more financially responsible. And so you see that the benefits trickle down into the ecosystem that they operate in. So yes, definitely
So maybe
something worth noting.
that's the maybe best advantage you have talking to the LPs afterwards. Look, statistically, from every dollar you give me, I'll give you two. It's not a bad argument.
Absolutely. Absolutely. Well, I'd like to say that our team is a little bit balanced. Our chief investment officer is male, and we have an analyst who's also male. So I think you have to have, and our investment committee is 60% male.
Mhm.
I think we're balanced in that approach. In any organization, I think it's better. It's just better, get better results.
So how does the process of, you mentioned investment committee, so that got me wondering, how does the process of decision making what you're going to invest your money in works?
Disclose too much about that, but I will say that we follow what we have within our investment policy, and the committee sits and majority decision rules based on the investment criteria that we put within our investment policy, and a decision is made. Of course, we assess the core fundamentals I was telling you about. We look at the financial side, the operational side, the organizational side. We also look at the impact side of things. And if this company performs well in our view, and we present the case to our investment committee, if the company meets the criteria that we've set, then the investment will go through. But it requires a majority decision-making position to be taken.
Yeah. Interesting. When I think about a fund, I feel like there's a CEO, there is a CFO, and so on, and those people just get together and decide. I like Nankonde. I never heard of the process of an investment committee. So yeah, that was new to me.
Yes, no, there has to be an investment committee. Something a new fund manager has to do as well is to be able to set one up, and we had to establish an external investment committee in order to instill confidence in the LP community. It's one thing to manage funds for an institution in the institution, but it's another thing to do it independently as a new and upcoming financial institution, investment fund. So to instill confidence, we set up an external investment committee to basically reduce risk, I guess you could say, reduce the perception of risk as a new fund manager within the LP space. They're more experienced than we are, and they bring a wealth of knowledge into the market, into the investment process that we
And I mentioned in the beginning that wCAP is a Zambian fund. Therefore, it means registered in Zambia. Because I saw a lot of people register their funds in Mauritius, Rwanda, Delaware, and so on. So I'm wondering why, if Zambia, and why did you pick Zambia compared to everybody else registering everywhere else?
So the business is registered. wCAP as an investment management business is registered in Zambia, but our fund is actually located in Mauritius. The reason we did that is because it's just a prerequisite that was required by the financial institutions. But our goal is to still set up a local entity that will be able to generate investment, to do investments from. Of course, this requires us mobilizing resources from local players within the ecosystem. As you know, it has not been an easy conversation to have. The number one target institutionally would be the pension funds, and I think there's been an aversion towards mostly equity-based investments. I think they are open to debt-related transactions right now, but I do see the space evolving. There was that transaction there was a fund, the $70 million fund that was set up by, I think it's the Growth Investment Partners, that was backed by one of the pension funds and two other multilateral development organizations. So I think the time is really good. And it's definitely something that we would like to do, is to set up a local vehicle to be able to mobilize resources from local players to then be able to back Zambian businesses. So for now, the fund is based in Mauritius, and we have the LPs are institutional from various sources, and we have a regional approach to our investments.
Interesting. So thank you for clarifying it for me. It was just back on my mind. And you mentioned the retirement funds. Is this something where you see the potential going forward for like Zambia or similar countries? How to get money into the system so more SMEs can grow, more startups can grow, or do you see also some other sources that can emerge or are emerging right now?
Yeah. As we said, our markets are fairly nascent. Financial markets or capital markets are fairly nascent. The immediate institutional source for financing is from the pooled investment vehicles or pooled structures such as pension funds. And I think there might be a change. I think their regulation only allows, if I'm not mistaken, 15% of total assets under management to be placed into investment vehicles. Or is it private equity? I stand to be corrected, but it could be that, not it could be, these are definitely the prime sources of financing or resources to be able to be placed in local vehicles that will then be able to be funneled into the private sector that needs the financing. As we said, the banks, I think, are pretty limited in how they can lend. And so it makes sense to me to be able to create more investment vehicles within the ecosystem to be able to target that missing middle that the banks don't cater to, or maybe the microfinance institutions and angel investors don't cater for.
Yeah, I mean, especially for the small SMEs, they need a loan that's $10,000, $20,000 for some new equipment that's below your threshold yet, but they need to grow to your threshold somehow. So I feel like
Yes.
that could be a good source
Yes.
of financing for them.
Yeah. My advice to founders like that would be to take a blended finance approach to their capital stack. Yes, you can go and get grants sourced from the individual high net high net worths that will be able to give you financing, but also creating a growth plan that allows you to organically grow the business. I think that's very essential. What we see a lot of is businesses that just perpetually depend on the grants to grow a certain aspect of the business. What we'd like to see is more retained profits, I would say, retained earnings, reinvested into an aspect of the business, if at all they have the margin to do so, to be able to grow organically. I think at that point, that is when the serious investors, the institutional type of investor, will sit up, take note, and want to participate in the growth of the business.
Interesting. You mentioned grants, and I noticed there's a lot of grants from $5,000, $10,000 to even $250,000 and so on, depending on the type of project. But what is resonating now in the news is the lobby to corridor, right? EU global gateway getting in and trying to create like industry zones and so on. Do you see potential to utilize this like global gateway EU money also for like your solar projects that you work on? Because I feel like solar power plants or renewable energy could be one of those infrastructure things that the EU would take favorably.
So I will not say too much about this, but I am aware that there are several grants that will be coming to the fore, aligned with the Lobito corridor. I think that the Lobito corridor is mostly about infrastructure, renewables, and critical minerals. Critical minerals falls within the mining space, and the mining space, I think, is one place that lacks that initial seed money to be able to do the geological surveys, your exploration and feasibility studies that will create a bankable scenario that investors can then use to be able to place funds into. So I think from a grant perspective, we might see some of that coming on. I believe there was a grant that was announced like that during the forum, but I am not an authority to speak on this. I would encourage people to take a look at that, but I don't think that's the only source there. There might be various others, especially with the interesting critical minerals by the US government. It's just something that I think is probably going to become very predominant in this region for the next foreseeable, I would say, for the next foreseeable decade or so. So those founders need to take advantage of that at startup phase, because the banks will not give you financing for a feasibility study.
Yeah. So you would say that the sectors, I know you're sector agnostic, but the sectors to keep an eye on are mining, agriculture, and fintech in Zambia and the surrounding countries, or are people missing something that is kind of hiding in the shadows of these three big sectors?
Africa, I would say that agriculture is the number one economic activity that the normal population participates in. And for us, because we deal with women, that is where we find the bulk of the businesses that we find. It's what we do. We say agriculture, but we mostly focus on those that are in the value add space, so agribusiness space, manufacturing space, FMCG, etc. Those types of
Mhm.
businesses will do very well. At the end of the day, food is a fast-moving commodity, and so it's sort of a no-brainer. There's always going to be high growth in those areas. We said we like investments in the climate space. Again, this is off the back of what we see prevailing within the region that we see. There is an environmental problem, there is a climate problem, and we will support those businesses that provide climate smart solutions. Whether it's a renewable energy project, whether it's something within the circular economy, we just want to see that aspect of the business, the private sector, being able to get financing. It's actually what we are doing. We are a sustainable finance oriented investment vehicle. And so this is a key area of focus for us. Because of that, we invest across all the climate verticals, which means we are an agnostic fund.
Mhm.
And I think it broadens the horizon of the types of investments that we could do.
And you have to be really up to date on all the information that was happening in the markets, in the width of it, and be in a lot of conversations. So my question is, where do you get your energy? Is it, do you play golf, or is there any any books or podcasts, anything that you listen to that gives you the energy and inspiration to keep it going even the next day?
Yeah, I do listen to a lot of podcasts. I listen to a lot of financially inclined podcasts. I like to read biographies. I think learning from the journey of somebody else is always interesting. I always draw lessons from them. I think the first biography I ever read was Richard Branson's, and I admire how he just is always quick to spot an opportunity and does whatever it takes to build a team around him to get that business out. So, in my spare time, I think that's what I do. I just love to listen to podcasts and maybe read a few biographies that will inspire.
So that way you are also a little different as a fund manager. No golfing to others.
Oh, golf, I think, comes with the terrain. And it's something that's on
Okay.
my to-do list, or a bucket list, I would say. When I have the time, I think I would like to make time to learn how to play golf. Absolutely. Great networking sport as well. So you see, work is just always there. It's always part of the plan.
Yeah, I'm the same. I'm thinking like I'm gonna start this year. I'm gonna go try it, but I think I was waiting for you to be my golfing partner.
Absolutely. More than happy to do so.
Good,
Yeah,
good. At least we have a plan when I come to Zambia. What to try together.
absolutely.
And so, what is something that you would advise people, coming from Czech Republic, Slovakia? I know that Eastern European bloc, they are looking into Africa now. They feel that's risky, but there are a lot of opportunities. So, what approach should they
Mhm.
take to take their, let's say, $50,000 to invest for the first time? What is the thing they should be wary of, and how to handle it?
Yeah. I think when it comes to Africa, my advice would be um, come with an open mind. Africa is very diverse, and be willing to take unconventional risks or take an unconventional approach to your investing if you really want to be impactful and if you want to find those gems. Being You need to be that that investor that is willing to experience something very different from those markets that you come from, because our markets are not as developed as those ones are. So I think even in terms of managing your expectations, one needs to be a little bit more, you need to adjust your expectations. There are challenges that we have within this market, especially with respect to the business environment. But I think in terms of the potential returns an investor could make for $50,000, I think you could tap into the seed stage segment of the market, and you might be that investor that participates in the early stages of something that could be really transformation and also financially rewarding.
It's the best combination, right? Impact and financially rewarding at the same time.
Yes, absolutely. I heard a story. There was an angel investor. I don't think I should say his name, but he invested in a company. He did put in $50,000, and I believe 5 years later, it's gone to IPO status, and his $50,000 has turned into 5 million, something like that.
Yeah, it's a pretty good return. I wouldn't mind.
Yes. So I think with Africa, potential to make some significant returns is there. You just need to have the appropriate risk appetite to be able to sort of stomach the challenges that you will face. But in the long run, if you persevere and if you are consistent, you will, I think, reap the benefits. Putting in place the necessary measures, you need to do your due diligence, understand the market that you will be investing in, operating in, and also don't just read publications that people publish from across the pond. You actually need to be on the ground and get your own data, your own empirical data to make a valid financial decision on the investment that you will make. This is not just for the seed stage investor or the angel investor. It's for those institutional investors that want to come into the region, or even for the multinational company that wants to acquire an entity here. I think thorough market research, on the ground data is your best source of business intelligence and knowledge.
So when people want to follow you to get their business intelligence about Southern Africa, reach out to maybe partner on an investment, where can they find you?
So we can find us at our website, which is www.wcapltd.com. You can email us at info@womencapital.co. You can catch us on LinkedIn at wCAPZN. We are also on Twitter and on Facebook with the same handle.
And what can people approach you with?
They all we want is a pitch deck from you, and then we'll be able to set up a discovery call and do an assessment to see if you're a good fit for the investment vehicle or structure that we've created.
Well, I hope there's going to be millions of emails now coming through to you. And you'll know when to stop to look at so many pitch decks. And Nyeji, I would like to thank you for providing us with your time, with your experience, with your knowledge. And it was a fun conversation for me. So thank you for teaching me something today that I didn't know an hour ago. And I hope this same experience is going to be for our listeners, and that you will get a lot of new followers on the OW LinkedIn page.
Thank you. Thank you very much for having me on this show. Also been a pleasurable experience. So looking forward to seeing what new content you put out as well. And I'm looking forward to those people that want to reach us. I just forgot to say, we don't just invest in Zambia. We cover Namibia, and we also do opportunistic investments in South Africa. So we are open to receiving pitch decks and proposals from those countries too.
So the wider regions.
Yes.
Guys, don't be afraid and send those pitch decks. Maybe they will open a new market for you too, if it's good.
Absolutely.
Take care, everybody. Have a great day.
Thank you for joining us on Beyond the Pivot. Remember to subscribe, follow, and share this episode with anyone passionate about Africa's future in business. For more stories and extra resources, visit tambotiseko.com. Until next time, keep pushing boundaries and shaping the future of African entrepreneurship.